So Elon Musk is in the news today because he tweeted something, and basically he's coming out against the bill that's in Congress right now, the big beautiful bill as it's called. And he's saying it's simple math, and they're spending too much, and blah blah blah. Here's the problem with that: is that I've been doing this a long time. I've been in the tax world since 2009. I've done over 50,000 tax returns. I've worked on billions of dollars worth of client earnings. And here's the reality: is that seeing all those thousands of people's financial situations, it does not matter how much you make. There is no amount of money you cannot spend. And that's true for individuals, that's true for families, that's true for governments. And if you're concerned about the debt, you're never going to succeed when you're trying to cut off the spending part. What you have to cut off is the revenue part, which is your tax money. So the the way to impact that and impact inflation and impact all those downstream effects is to pay less in taxes. If you give them less to spend, they can then spend less. And that's just it. That's just how the incentives of the system work. And what we saw during the last years with 2021, 2022, when there was high inflation, Americans will not tolerate 10% inflation. So that's like the limit of how much they can print over and above the amounts that they raise through tax revenue. So if we take them from 4.5 trillion of revenue down to 4 trillion of revenue, or down to 3.5 trillion of revenue, then they can spend less, and they can only print so much above that, and then that's how we reduce the debt. It may not reduce in absolute terms, but it'll slow down. So that's the debt versus deficit issue. So that's what we aim to do here.